Welcome to the financial jungle. This is Sharekhan podcast.
So hello and welcome to yet another podcast by Sharekhan with me Rohan Manmala, and today we're going to talk all about SIPs, which is Systematic Investment Plan. And to give us more information on this, with us we have someone who's been a part of the mutual fund industry for over 14 years and working with us for 6 months now. She is the AVP of Investment Product at Sharekhan, Miss Sadiya Khan. So Sadiya, welcome to our podcast today.
Thank you, Rohan. Pleasure being here.
So Sadiya, all of us have been subject to a lot of information on SIPs. So to begin with, what actually is SIP all about?
So SIP is nothing but a mode of investment. Fund houses offer SIP as a convenient mode of investing regularly, where the frequency, amount, name of fund and the period of investment is fixed at the time of investment itself. So if you compare an SIP to a standing instruction that you give to a bank to pay your electricity bill or your mobile bill on a monthly basis, the only difference is that these are expenses, whereas SIP will be an investment.
So according to you then, Sadiya, what is the best time for an investor to invest in an SIP or to start one? What would you say?
So Rohan, the beauty of an SIP is that it takes away the element of market timing from your investments. You don't have to, since the date of investment is predetermined in an SIP, you don't have to really worry about when to enter the market and when to stop your investments. You automatically buy low, fewer units when the markets are rising, and you're buying more units when the markets are falling. Let me explain this with an example. NAV is net asset value of the fund, which is the price that you pay to buy into that particular fund. Suppose the NAV of your fund is 50, and you have an SIP, monthly SIP of 5,000. You will end up with 100 units in the first month. Now, if the NAV was to rise to 52 next month, your next SIP will only get you 96 units versus the 100 units that you got. Similarly, if the NAV was to fall to 48, you would end up with 104 units, versus the 96 units that you got. This disciplined approach to investing helps you bring down the cost of your investments and take advantage of market volatility. In fact, an SIP is more effective in a volatile markets. Suppose if markets were to only rise, you'll end up with buying fewer and fewer units each month, and the cost of investments would rise, and of course your returns would get impacted.
Sadiya, assuming most of us are new to the market or have just started, what is the ideal amount that one should invest in the initial stage?
So Rohan, an SIP can be started with an amount of 500 rupees as well in a fund. This is because the amount is targeted. SIP is especially targeted for retail investors, and the amount has been deliberately kept very low to ensure that each one of us can start an SIP. However, the amount of the SIP should be decided based on two things. One is your ability to save, and the second is the financial goal that you're looking to achieve.
So Sadiya, lastly tell us, are there any more technicalities that we should be aware of while investing in an SIP?
Yes, the first thing that I can think of is an investor usually thinks that a fund and an SIP are two different things. SIP, as I mentioned earlier as well, is just a mode of investing. So it'll have the same load structure, expenses as your lump sum investment for that particular fund that you're investing in. So for instance, if it's an equity fund, you would have an exit load of 12 months, and this will apply on every installment that you're investing, because in a lump sum, the amount is in one go, whereas in an SIP, it is broken down over a period of time. So every installment would be applicable to an exit load which is charged by the fund. Similarly, for a debt fund, the similar load would apply. It would be little lesser than your 1 year time horizon. So these are the few things that I can think of, top of hand for an SIP.
Okay, so that brings us to the end of this very insightful podcast. Sadiya, thank you so much for being part of this session today. We learned a lot about SIP, and I'm sure many of our listeners may have found this very helpful. Thank you once again.
Thank you, Rohan. Pleasure being here.
And all you guys out there, if you have any finance related queries, do follow us on our social media pages and we will answer them for you. And stay updated on what's happening at Sharekhan by logging on to our website www.sharekhan.com.
Mutual funds are subject to market risk. Please read the offer document and scheme related documents carefully before investing. Refer to Sharekhan website for the detailed disclaimer.